Good evening, ladies and gentlemen. Moments ago, you have witnessed the launch of our case study book, a record of real challenges and hard-earned lessons that our peers have been through during their internship. So this is not a textbook example. They have lived these experiences and they carry the fingerprint of real decision and real outcome. But that naturally raises a question, one that I think each of us has struggled at some point during our lifetime. How well does what we learn in theory actually prepare us for a practical scenario? That is the conversation we are having here tonight. So my name is Dulanjana Kaishan, currently serving as an executive in compliance and control at Hemas Manufacturing Private Limited, and I'm honored to be the moderator of this evening's panel discussion titled Bridging the Gap Between Theory and Practice. So joining with me today are four of my fellow colleagues who have also been through this journey and here to share their insights. First to my right is Agisha Ailan, Audit Senior at Deloitte Sri Lanka. Next to her is Nadun Priyasanka, Audit Senior at KPMG Sri Lanka. On my left side, we have Nirushika Muralidharan, Audit Senior at KPMG Sri Lanka. And finally, we have Shakir Nisar, Assistant Accountant at Divine Worldwide Private Limited. So each of them brings something rare, not just knowledge, but the genuine experiences of theory collides into reality. And I can assure you that this discussion will be both exciting and insightful. So without further ado, let's begin. 5 years ago, if someone had told you that carbon emission or supply chain ethics would end up in an audited report, you wouldn't have believed them either. But that is the situation that we are in today. So Agisha, now that SLFRS S1 and S2 are here, this changes everything about how businesses report. It's not just about financials anymore. They have to be transparent about sustainability risk and climate-related impacts too. So from your perspective, what is arrival of these standards mean for a company, how they report, how they think, and basically prepare themselves?
Yes, Dulanjana. So from my perspective, SLFRS S1 and S2 are more than just new accounting requirements. They signal a fundamental shift in how businesses think about risk, reporting, and long-term value. So reporting is no longer only about financial numbers. Earlier, companies mainly focused on profits, assets, and liabilities. But nowadays, businesses also considering sustainability risk and climate-related impacts. And more importantly, how these risks could affect their future financial performance. So sustainability reporting is no longer a separate CSR section in the annual report. It has become a part of core reporting and strategic decision making. So Dulanjana, overall I see SLFRS S1 and S2 as a positive and necessary development. It improves transparency, encourages long-term thinking, and strengthens the investor confidence. But for the successful implementation, companies need time, capacity building, and mindset shifts within the organization. So that is my opinion based on my academic understanding.
So that's very insightful, Agisha. So all of us know that after 2025, all the top 100 companies need to implement these SLFRS S1 and S2 standards, and soon other companies need to follow up on that. So, Agisha, from your experience in sustainability audit assurances, what challenges that Sri Lankan companies have been facing while they're trying to implement these SLFRS S1 and S2?
Yeah, so from my experience in sustainability assurance engagements, I can say that Sri Lankan businesses are still in the transition phase. One major challenge I observed is data collection. Usually financial data comes from a structured accounting system and properly documented. But sustainability data is very scattered. It comes from different departments like HR, procurement, engineering, and operations. For an example, if we're reviewing carbon emissions, we have to collect information from fuel records, transportation logs, and electricity bills, sometimes even from manual Excel sheets. So this makes reporting more complex and increases the risk of errors. And another issue is documentation and internal controls. In financial audits, there are clear standards and proper working papers. But in sustainability audits, sometimes the calculations for emissions or waste were not properly documented. If we ask how these calculations were calculated, sometimes the explanations are verbal rather than written methodologies. So, in assurance perspective, this creates difficulty in verifying the accuracy and consistency. And also, Dulanjana, I've observed that sustainability teams often handle separately from finance teams. However, SLFRS S1 and S2 requires integration. Climate-related risks should be now linked to financial impacts, cash flow projections, and overall strategy. So companies need strong collaboration between sustainability teams and finance teams. So previously, sustainability frameworks such as GRI were conducted voluntary basis. But after the mandatory adoption of SLFRS S1 and S2, the expectations of compliance requirements have significantly increased. So yes, I agree that Sri Lankan businesses still have a long way to go. Larger listed companies are more relatively prepared, especially those who have already following international sustainability frameworks. But some companies need better systems, strong internal controls, and more training. So that's what I observed during my internship.
Thank you, Agisha, for sharing your perspective and some great addition to sustainable topic. And I think Nadun, as an auditor in KPMG, who engage in with so many companies, has something to add to this topic. So, could you share your practical examples that you had during your internship?
Yeah, definitely, Dulanjana. So thank you very much. And thank you very much, Agisha. You shared the valuable insight regarding SLFRS S1, S2, and sustainability side. So, Dulanjana, I would like to add the practical example which I identified during my internship experience. So, Dulanjana, one of the larger company, they had to decide their warehouse in that area highly vulnerable to the flooding. So, the decision was mainly based on factors such as lower land cost and convenience to logistics. But Dulanjana, they did not properly assess their climate and environmental risks before constructing that warehouse. So after some time in that area, experienced the several flooding issue due to bad weather condition. So as we all know, the cyclone Ditta came to Sri Lanka and it did lot of damage to Sri Lanka in some areas. So that warehouse also situated in one of that area. The significant inventory portion inside was destroyed. That incident was a cause the significant financial loss for the company as well as operational disruptions. So Dulanjana, now this case highlights the importance of sustainability in modern business practices. So sustainability is not only protecting environment, it ensures the business decisions are capable, resilient, and withstanding long-term social and climate challenges. So Dulanjan, I think climate risks directly affect to the financial risks. When company ignore climate-related risks, it could affect to their financial statement through losses, asset damage, or operational disruptions. So that's the answer for your question, Dulanjan.
So that's a great addition to the topic, Nadun. So you mentioned that climate-related risk eventually comes to financial reports under cost if the companies don't properly manage it or oversee it. So I have a follow-up question. So what can accountants or any other financial individual could do to protect their assets from climate-related risk like this? Is there any business implementation or any structural changes that they could take?
Yeah, it's a timely, valuable question, Dulanjana. So as a young auditor, to prevent similar kind of situations in future, one word come to in my mind. It's BCP, Business Continuity Plan. So business continuity plan is a strategic framework that help organizations to prepare unaccepted situations such as floods, natural disasters, or other climate-related events. So on the other hand, Dulanjana, as a future accountants, we are not responsible only to prepare financial accountants. So think Dulanjana, So one of the people who are not engaged into the financial services or outside from financial services, they also think financial accountants are only responsible to preparing financial statements and reporting financial figures. But that's not a thing, Dulanjana. Financial accountants are also responsible to assess climate-related risks as well as promoting sustainability. So, Dulanjana, considering the recent climate situations such as El Nino and other climate-related events, its companies may have great exposure to climate-related risks. So, if we consider the business environment, that's climate-related affect to across the industries. When it comes to manufacturing sector, water distress and operational disruptions. And then special tourism sector, the extreme weather condition affect their number of visitors, and especially logistics, floods or other things affect their traveling and other transportation facilities. So Dulanjana, this is the where SLFRS S2 climate related disclose become important. So by incorporating climate scenario analysis or resilience in business decision making, so company can mitigate that kind of future uncertainties and comply with SLFRS S2. And also, Dulanjana, accounting implications are also included in that situation. So, LKS 37, it emphasizes the importance of recognizing provision and other liabilities when there is a probable risk of loss. And also, impairment indications also included that situation. So, in my opinion, Dulanjana, I think integrating sustainability and business continuity plan is essential. So, my current understanding, that is the answer for your question, Dulanjana.
Yes, you are absolutely correct, Nadun. So BCP is a great addition for a company if they want to evaluate their risk and take action before that risk come to real life. And that reminded us sustainability is no longer a soft topic, it's a hard accountability measure. And that accountability lens brings us to the second topic of the evening, which is taxation. So Sri Lankan tax landscape has seen some major changes recently, right? So this will impact how businesses process their structures and how they govern. So Nirushika, how are Sri Lankan businesses navigating these new changes, and what does true tax compliance look like in this new environment?
That's an interesting question, Dulanjana. So we have seen some recent implementation regarding to the VAT and the withholding. So in today's business environment, if the companies do not properly manage their tax obligation, then the impact will go beyond interest and the penalties. So even that can affect the stakeholder confidence also. So one of the very recent implementation that caught my attention, the VAT registration threshold has been decreased from 60 million to 36 million. So which means nowadays more SMEs are liable for VAT. So what the company have to do is, they should continuously monitor their revenue throughout the period. So not just waiting until the year end. So and another implementation that caught my attention, so the move towards to the mandatory secured POS system. So for the larger private limited companies and for the PLCs, I don't think this will be a significant impact because they already have their ERP systems and the automated controls and everything. But for the smaller entity, I think this is a good opportunity to move away from the manual control. So, and very recently we can see IRD have implemented 5% withholding tax on a broader range of services. So when the company makes the service payment, they should ensure the correct withholding tax is deducted and remitted. So other than this WHT and VAT, so nowadays we can see the IRD is implementing some stricter enforcement with strong TIN requirements for the penalty for the non-compliance and all. So here, when we compare Sri Lanka with other developed countries such as UK, Australia and Singapore, so the main difference that we can see, they are not consider this tax as a year-end exercise. Because in those countries, tax risk management is a part of their corporate governance. So those multinational companies are following real-time tax monitoring through ERP system. So where tax-sensitive transactions are flagged immediately. So because of those kind of practices, they can able to reduce their tax-related risk. But still, I think in Sri Lanka, we are still following this tax as a year-end exercise. So I believe if Sri Lanka also can get benefit by following those kind of practices.
That is a lot of changes that you have explained, from revised VAT thresholds and digital implementations and possibly higher penalties for non-compliance. And you also shared some ethical practices that other countries have been following. Now, could you share something that you have first-hand experiences in your internship to the audience also?
Yes, Dulanjana, that's very interesting question. So even audience also can refer this case study in our case study book. So during our internship, we had a BPO client, so which made a tax loss in 1 year. So they decided not to recognize the deferred tax asset as at that time. So as at that time, it was a reasonable decision because the future profits were uncertain. But in the following year, we found that the company had some secured long-term contracts, so which can provide a strong evidence that the company would generate stable profit in future. But what the company has done is, they did not revisit their assessment and they did not recognize the deferred tax asset. So this results a lower profit and the lower net assets in the financial statement. So this meant the financial statement is not truly reflecting the company's actual performance. So this is an area where multinational companies have moved ahead. So for example, I can say Unilever have implemented tax control framework where significant business developments are reviewed from tax perspective. So when a company enters into a new contracts or if it is enters into a new market, then the tax implications are reassessed immediately, and because of that they can able to reduce their tax related risks such as penalty and everything. So I believe Sri Lanka also can get benefit by move beyond from the traditional tax compliance and adapting to a more proactive tax governance, such as better coordination between the finance and the operation team, and regularly monitor the tax positions and all the things. So I think, Dulanjana, I have given the answer for your question.
Yeah. Thank you, Nirishika. That's an important reminder that we must pay attention to what is hidden and what get left unrevised. And following from that, I would like to shift our focus to a topic that sits at the very foundation of what we have discussed here, and that is governance. So Shakir, let me set the context for you. Governance framework are everywhere. We can see it everywhere in an organization, from policies, committees, and to defined roles. But the organizations still faces fraud, misstatement, and misaligned decisions. So in your opinion, what is the relationship between internal controls and governance? And what does it truly take for moving from policy document, which is a written document, to a more cultural aspect within a company?
Thank you for setting the context, Dulanjana. So you really highlight the classic gap between theory and practice. So as you said, at its core, the governance is simply about how an organization is directed and controlled. So in order to have the good governance culture surrounding the organizations have its inherent rules, responsibilities, procedures that keep everything running the right way. So good governance creates, Dulanjana, accountability and transparency towards an organization. When the company have an active board, independent audit committee, risk committee, it creates a culture where people at every level understand what is the expected outcome of them. And that culture becomes solid foundation of the entity's control environment. And Dulanjana, strong control environment start at the top, like tone at the top. And when leadership demonstrate integrity and enforce policies consistently, that will flow for entire organization. As a human being, Dulanjana, we follow and see what they practice rather than what just written a policy document. Governance provides structured insights, and you know that audit and risk committees evaluate financials, the efficiency of the internal controls, whether those are working sufficiently, and they are also responsible for accomplish the organization goals and objectives as previously stated. Dulanjana, at the inception also, this moment also, I have elaborated the good governance definition and framework and all. But Dulanjana, when it comes to the practice, we have to see those governance are really practically practiced or not. So Dulanjana, if we take an example from recent Sri Lankan economic advancement, so we have seen lot of huge governance failures. So one of the big governance failure I have seen is that NDB bank fraud case. So NDB, Dulanjana, in the NDB bank, it's a private owned bank where it caused a loss, internal loss around 13.2 billion. It is mainly happened due to the support of the inside staff members and by the support of the external third parties. So Dulanjan, in that case, as per the reports, insiders from that particular bank, payment and reconciliation unit, they shared each other's password credentials in unauthorized way, and they made safe transfers to unauthorized accounts via weekends. So that is a really incident for the fraudulent activity. So Dulanjana, in order to mitigate for that particular fraud case, they have identified the legacy system loopholes and they manipulated that system against the internal ledgers, and all the transactions are remitted to LankaPay system. So Dulanjana, that is a huge capital leakage because they are mentioned under their particular balance sheet item called other receivables, other financial assets, SEF receivable. As per the investigation, Dulanjana, it also revealed that SEF balances are suddenly increasing from 1.5 billion to 13 billion suddenly. So as auditors, I think 3 of my colleagues also agree, as a preliminary audit procedure, auditors are doing variance analysis or the anomaly testing. In that particular Committee of Public Finance also asking, so why this kind of variance you are not addressed in advance? So as a student and an intern, I have seen that if the bank is a crucial and vulnerable for such kind of a fraud, the bank should always keen on their activities. And bank should take proactive action rather than reaction. But Dulanjana, after something happened, the action is useless, minimal. So banks should enhance their internal controls and they need to have a proper segregation of duties. So Dulanjana, some of the jobs also, if it is critical, you have seen that they are asking background checks and all. So the bank should also keen on that aspect and they have to rotate their staff repetitively. And they, irrespective of the fraudulent activities, the committee also suggests that the bank should adhere with the forensic audits and all. So Dulanjana, so finally, as a conclusion remark, this link is simple. So good governance create policies and procedures and all. And strong control environment make that into a real practice. So that is my understanding for the question that you raised, Dulanjana.
Thank you, Shakib. That is some great points that you have highlighted and good answer to my question as well. So I would like to add something to that. So in my point of view, one of the biggest governance that I have seen is that people making decisions without a single or reliable source of truth. When you have lot of manual touch points in your processes, you cannot simply guarantee you will get the same results each time you have practices it. Human errors happen, shortcuts, definitely. Then your reports are telling you one thing and the reality is totally different. That is where end-to-end system-driven processes make a real difference. When your processes are living in an automated state, the data is secure, steps are enforced, and governance becomes almost automatic. Then the leadership could actually trust the numbers that they are seeing. So then you could go a step further. You could automate those repetitive and rule-based tasks, and then you could free up your workforce for some high-value work. And in my point of view, governance is not just about control. It's about giving people the right information at the right time to make the right call. And with that, we arrive at the close of what I think we can all agree, a rich and thought-provoking discussion. So tonight, we have moved through 3 landscapes: sustainability, taxation, and governance. So what struck me the most, looking back across all these discussions, is this. The gap between theory and practice is not a gap in knowledge. It's a gap in courage. The courage to ask the inconvenient question, to flag an issue, and to push back an assumption when everyone in the room has already accepted it. So our case study book is filled with moments where courage makes the matter. And it's a soft reminder to all of you that we are not merely students who are looking for a profession. We are the future who will shape it. And heartfelt full thank for my colleagues who have shared their insights, Nirushika, Shakir, Agish, and Nadun. So you truly helped us to bridge the gap between what we learn and what we live in. And to everyone in this room, thank for being an engaging and curious audience. So I hope this discussion sparks something in you, a new question to ask, a new perspective to explore, and simply the confidence to trust your own professional judgment when it matters the most. So I'm Dulanjana Gaishan, signing off as your moderator for tonight. Thank you, and enjoy the rest of tonight.